Well, howdy. It's Mike again. It has been a while. Might not feel like a while for you guys, but for me, the last one I recorded was almost a month ago. Did a bunch and put them in the can, and now it's time to do a bunch again. So this is going to be a fun one. Well, they're all fun, aren't they? But this one is really cool. It's kind of a wild and crazy stock. This is going to be eBay's original move out of its IPO base back in the late 90s. And we're going to study this one. There are a lot of nuances. It's a very tricky one. We're going to cover, it's really a hard move. And I think we're all going to learn something, myself included. I think there's a reason why you study models is you study them over and over again. And every time you do it, you learn something. So, I'm learning as I go. Every chart I look at, try to look at as many charts a day, probably 5,000 on a typical day, and you try to learn from every single one. But when you do a model book study, that's when you're really trying to really like pick up on nuances and things that you want to use in the future. So the IPO market is starting to heat up again. It's been really kind of bad for a while. And so I thought we should start doing some of these model book moves out of IPOs so you can see how things have operated historically. This goes along with the one that I did on Google. It's IPO based, which was well, let me just share this with you. Hold on a second. Okay. So this is the Webby Rambles on episodes is on my YouTube channel, the Webby 5150. And the one that you should watch along with this one would be number 8, the IPO base, which is one of my inventions that I invented the IPO base after we traded Google's IPO and we were looking at it as something that it really wasn't. So I spent a bunch of time and I studied every single IPO of all time, even ones that had gone, bankrupt or got merged or whatever. And I studied every single one and came up with the IPO base. And the Google is kind of the standard one that everyone is measured off of. And this one that we're going to talk about today, eBay, is similar in ways and very different in others. And we'll get into that in a bit. But you can see there's a lot of episodes now. We have, 25 episodes out. So what I've done is I've put these in playlists to make it a little bit easier for you. So the Hanging Out series right now, the only one in there is the one I did with Dawn, and that was so much fun. I'm going to be doing a ton more of those where not your traditional interview, but just a couple of traders just hanging out. And in fact, there's some people that don't even trade that I'm going to have on, and some that do trade. But the reason why I'm having them on is not because of their trading, is because of their life is very interesting to me, and they're good people. So I'm going to be I'm asking a bunch of people that I admire to if they want to hop on the show or not. And I've got like I said, this next week I've got 3 that I'm going to be recording, and I'm really excited about those. Hopefully some more. Now, besides that, okay, with this one here where you can see Axel in the background, this is just for all my, oops, didn't mean to do that. This is for all my musical things. Let me go back to that playlist. So the non WRO music plus other cool stuff. So in there, I'll put a playlist of anything in that playlist, like Guns N' Roses, Van Halen, Eric Clapton, things like that, but also podcasts that I find interesting or just clips. This was Wall Street Week from back in 1987, or if I'm on a podcast, I'll put it in there. So just things I'm interested in, and if if you have time to just have that in the background while you're working, that's what I do. I just, keep it on random. Then there's another playlist called The Other Ones. These are, kind of the miscellaneous pile. And this one, the only one in there so far is just how I use market surge. So you should watch that if you're interested in that. Then what is this one? Non-stock related. Oh yeah, my favorite section. So we've got fear and goals. So number 11 and number 22, and these are my favorites. There, I opened up a ton. Probably not smart to do what I do on these, but I'm trying to help folks as well as get some stories out there. And if I were you, I'd listen to both of those, man. I think I think you can learn a lot from them, frankly, regardless of whether you trade or don't trade. If you have someone, if you watched it, you might want to share it with someone who doesn't even trade. It might be helpful. The next one, the things that probably most people are interested in are the general market series. So these ones here, anything general market related. So from my first one that I did with precedent analysis, or the 21-day follow through days, a couple on that, market crashes, what happens afterwards, that was really timely and worthwhile watching. The Webby RSI. We're going to touch on that a little bit today. Then also the power trend, which if you haven't watched the power trend, you need to watch the power trend like now, ASAP. So you understand what that is. And we go through a lot of historical examples so you can see how they play out. Then you've got the model book series that this one is going to go in there. So you've got how to build a model book. And then just a whole bunch of different ones to pick from. And there's some great ones. And like I said, the one that this one goes along with is the IPO base number 8. And then what do we have over here? My inventions, which some of these are in there twice. So like the IPO base will be in this one as well because it's one of my inventions. But from, let's see, from the top, like pattern rec, quicksand, quicksand, Grateful Dead. That's a must watch. Like, that's the core of everything I do. I think, you should definitely watch that one. The Webby RSI again, Power Trend, things that were in the other one. The Growth 250, one of my inventions. IBD Composite, one of my inventions. And then the one I just did, the last one I released was on how to cut your loss. And this was more geared towards position trading. A lot of what I talk about at times, it's certainly at IBD is swing trading related, but this is more for position trading. So think swing trading is holding days to weeks, whereas position trading is holding weeks to months or longer. And then, how you handle it when a breakout fails. So my strategy for that. And then let me see. And then this, if you just want the full list of all of them, it's just in here, just in order, all 25 of those. So that is where you find that. Please share it with folks. I'm spending the time to record these, and I really like to help folks, and can't help folks if you don't watch it. So thank all of you for watching, and really all the nice comments, man. There was one rude comment recently. I'm like, dude, what is your problem, man? Like they said it was too long. And it was one of my shorter ones. Man, dude, I'm telling you, if you're the one who put that and you're listening, don't watch my stuff, man. Don't. I don't want you in here, man. Don't complain. Yeah, I'm giving you stuff for free. I don't want to hear it. Don't have the balls to sit and put something that it's too long. Man, just don't. Don't watch. Watch it 2 times speed. Fast forward, I put the little time things. You can just go to the heart of it. You don't have to listen to this stuff. You don't have to listen to music stuff or whatever. But man, dude, that pissed me off. Don't do it. But everyone else, but that person, I love you. Thank you. I consider this the Webby Rambles on extended family. And my real family watches, my parents watch. So thank you, mom and dad. Best parents around. I'm looking forward to going out to California to see everyone, but specifically my father for his 80th birthday and my mother for her 79th. So that is going to be wonderful. And, so anyways, there's two reasons why I'm doing these. One is for you guys, is in everyone in the Webby Rambles On extended family. I want something free for you because I know that there's a lot of great content out there that is, has price points attached to it. Some very fair, but very high, and frankly, if I boiled this down to just the meat of it, I could package it and sell it for a fair amount of money. But I knew that if I was just starting out, I wouldn't have that money to watch things. I mean, I started off, I was dirt broke, and didn't have, buying a $10 book was a big investment for me, believe it or not, it really was. And so, paying a bunch for things, well, that's great if for the folks who can afford it. And I've got tons of stuff at IBD for things like that for folks who can afford things. I mean, we've got, the IBD Live that I'm on every Monday, Wednesday, and Friday in the morning. And we're talking about the market in real time, what we're doing. And you'll see, the mistakes, what we do right, what we do wrong, but we're really trying to help people learn. And that's a ton of fun, but it's actually really underpriced, frankly. I don't get paid a dime for it. So, don't think I'm trying to push it. If 1 million people sign up, doesn't change my life. If everyone cancels, doesn't change my life. So I am very proud of it and really dig it. And I think it's actually underpriced. Then I do once a month with Justin. I do a swing trader YouTube thing that is free, and every Saturday or every Friday with Ali, I do the stock market update. That's free, and that's about the current market. So that's why we don't talk about the current market here, because I do that a ton at IBD. So if you're looking for current market stuff, tune in there. Whether it's the free stuff or the paid stuff, and I'm proud of everything that we do, frankly, and I run Swing Trader, IBD Swing Trader with Justin. I take that very seriously, like very seriously. And we do monthly, we'll do an update. It's typically on the second Tuesday of every month, but this month it's going to be in July, it's going to be on the Monday instead of the second Tuesday. But just for scheduling conflicts. But anyways, that's where you can find this stuff. And I recently did a podcast that I'll put in there with David Keller. I don't think he's released it yesterday. I recorded it with him yesterday, and I think he was supposed to release it today or this weekend or something. And so I'll put that on my Twitter. It'll probably be out before this is even out, but that was fun. That guy's so smart and such a cool dude. I really get along with him, and I appreciated him having me on his podcast, and I'm going to have him on this podcast probably next month or August or something once we can work out our schedule. So I'm looking forward to that. Super bright guy. He used to work at Fidelity, and he really understands charts. So I dig that. And I don't want to tell you who I'm having on next week, but I'm really excited. Like I'm recording 3, and I just couldn't be more excited about them. And so that it's going to be a lot of fun. What else? So, the reason why I started this for my kids, my kids are 23. They're starting their careers. Got the best news while I was away from the WROs. And my daughter, who's always wanted to be, she's wired a lot like I am, where, I wanted to work for Bill and there was nothing else. There was no plan B. There was no, oh, if that doesn't work out, I'll do this. It was no, it was like, that was the only thing that was going to make me happy. And it did. But she, ever since I can remember, since like middle school, she wanted to be a high school band teacher and director, and the whole marching band thing, and that's her life. And she is a diehard workaholic like her daddy, and she needs to stop that. She needs to mellow out and enjoy life. but somehow I don't think she's going to be, because she just got a job as a director of a high school band and, teaching music there. And I couldn't be more proud of her. And if I keep talking about it, I will cry out of being happy. So I'm not going to do that, because we're going to have one episode without Webby crying. Can he do it? I don't know. We'll see. Take bets. Maybe it'll be a drinking game. Like every time Webby gets emotional, you guys have to drink. Let's see. Oh, and by the way, if you're ever in Austin, this is my favorite place to eat. El Dorado Cafe, the best Mexican food. It's like a hole in the wall, but great service, great food. Hard to get a seat. Try to get a reservation, even though. But anyways, enough of that. But the reason why I started these, you guys got me sidetracked, was for my kids. Like I said, they're 23. My son is starting his career in a completely different path, and he's changed his path a few times, which I think is great, because I was just wired on one path, and that's kind of scary, because then if that path doesn't work out, it's like, then what do you do? And he's gone on a couple changes, and I think that's wonderful too, man. But the point is, never had the time to, well, I could have made the time, but they were never interested in trading. So I didn't want to push that on them. I didn't want them to think like, oh, they had to follow in dad's footsteps. So I wanted this for them. So, because you never know, things happen in life. And if I'm not around, I just wanted something for them to be able to learn from me, because I've spent, a lifetime learning my style of trading, and I wanted them to learn from me, not from someone else, if they had any interest. And really, if they don't, that's fine. I'm hoping that when they have kids someday, that my grandkids will want to learn, and I want them to learn from me, and that's why I'm doing these. And that's why I initially started these, and I was going to just record them and keep them on my computer. But I was just, I'm a worrywart. I was worried that, like, I was going to, spend hours and hours recording these videos on how to trade and telling stories and stuff. And then, maybe the hard drive got lost, or it goes up into the cloud, and the password doesn't get passed along to the next person. So I thought, if I throw these up on YouTube, that, YouTube videos are going to be around forever. Like I just can't see. Well, most likely, right? There are some paths that could happen, but most likely they will still be around even decades from now, just like we have great music. I don't know if you can see up there. Let's see. We've got some great music up there. Some B.B. King from before I was born, some Beach Boys from before I was born, and just what a sad loss we had while I was gone. And I'll do a special one on the Beach Boys, because I really grew up on the Beach Boys, on Elvis, on Buddy Holly, Chuck Berry, Chubby Checkers, Little Richard, all what was originally thought of as the oldies, and just great stuff. And man, the Beach Boys, man, really underrated, just so really good. And there's a good, what is it called? Love and Mercy, I think. Movie on Brian and the Beach Boys, and you guys should all watch that. I need to rewatch that. I meant to watch it after he passed, and just didn't get a chance. And so anyways, I wanted to have something for you guys, and I wanted to have something for my kids and future grandkids. And so that's why they're here. That's why they're free. And that's also why I ramble. Because I'm trying to tell stories in my mind. If something comes to my mind, I'm just going to say it, because I figure, what, might not be around, and I want my kids or grandkids to know these stories that I may or may not have told my kids, or certainly haven't told my grandkids, because they're not around yet. So I just wanted to have it documented. So please be patient. And so for that rude person who put the comment that these were too long, who probably didn't even watch it, just saw the length, shut up. Stop it. That's no. Anyways, I'm going to go off on that tangent for too long. So just don't be that person. You can tell it gets under my skin. So, but to everyone else, I read all of your comments, every single one. I'm still behind, and I keep on like trying to like make some progress. But the nice thing is there's so many comments coming in that it's hard to catch up. And I feel like, man, if I ever get caught up on all of them, I'll feel a little depressed because I read them and man, even the long ones are just so nice, and I really appreciate it. And lots of good ideas too, that come from those. So thank you sincerely. Dig that. So where are we going next? We went through that. Is a long week. This is a Friday after I'm recording this on June 27th. And boy, this was the week that we broke out of the cup with handle. And we had, last weekend we had the whole Iran thing. And boy, am I running on fumes, 6 p.m. on a Friday. So, but I wanted to get this done because I missed doing these. And so this one is going to be on eBay. And let's get this show on the road. So we are going to, almost didn't share that. That would have been bad. Let's see. Okay. Hopefully you guys can see this. I'm having a little trouble with my computer, so just give me a moment. Okay, that looks about right. Okay, that was not the stock I wanted to look at. Okay, so we are going to do eBay's IPO move. So this move over here in 1998, we're going to study this part. On a future one, we'll do this move in here. This was one of Bill's big plays that he did and kind of really famously did because, well, we'll get into that on a future one. But really, I'm focusing in on this move over here in the 98, 99 time frame. So let's just do a change date over to 1999, or we'll just go to 2000 for a second so you can kind of see what that looks like on a weekly basis. So this monster move, I'll put the little best fit on for a second. This monster move out of this IPO base here on up, and then it tops. So we're going to focus in on this move, not really anything after this. That'll be, for another day. So we're going to see how we could have handled this. And let me just tell you, there's no perfect way without using hindsight to trade this one exactly right. And that's one of the reasons why I wanted to do this one, because you'll see that, again, if you're not using hindsight, some things are just really, really tricky. Like you could go through on this one and see like, okay, what level did it never go below? What indicator never triggered? And then just say, okay, you're going to use that. Well, then if you're going to use it on this one, then you have to use that on all the other ones, or have a set of rules on when you're going to use certain ones, certain indicators or systems of exiting and adding the other one. So we like to be very intellectually honest on this, and you're going to see that as we go through it, because we are going to get chopped up. We're going to make a bunch of money. We're going to get chopped up and so on. But this was a really powerful time, and let's look at it on let's look at the market during that same time frame. And DQC, and just keep in mind this went public on September 25th of 98. So 0 NDQC. So the NASDAQ 98. Okay, so right here, that's where it went public. So that's why I want to bring this up, was the context of what was going on. This was a major bull market. Like I believe we're in a major bull market. This was a major bull market, and then this portion was a bubble. This last part from October of 99 to the top in March, that was a bubble period. But this was just a bull market, like a major bull market. That's a whole thing. But when something goes public here, and the market craters, it's going to crater. And that's what happened with eBay, and why we always do kind of the three-dimensional chess, where we look at the market as well as the stock. But with that as our backdrop, let's get started in this, and forget that you need to clear your mind. What was it, like the Men in Black or something, where they had a little device where you press it and it erased everyone's memory? I don't know. I don't even know if I saw that movie, but I know that I think it was something like that in there. So if I'm getting it wrong, I'm sorry. But you want to, as we go back in time, you want to forget what ended up happening, because if you are using what ended up happening in your analysis, then you're just kidding yourself, because you're not going to ever get any better, because in the market you're going to be asking yourself, should I buy or sell? And go, okay, well, I'll wait until next week to know what to do today. Well, you can't do that. So you're going to make imperfect decisions. You're going to get sell and have a thing go straight up. You're going to make every mistake under the sun, and that's just the reality of the marketplace. And there was nothing trickier than really the 98, 99 time frame until that the bubble period. And that was a whole unique thing that happened. So we're going to toggle over to the daily and go through this from the very beginning. So let's go to September, what was it? September 25th, 1998. Okay. So it had just gone public the day before this. And let's pull up the NASDAQ again, just to kind of see what was going on. So it's just right here. You're coming up and right up into a declining 50-day. And eBay decides to go public. Frankly, they probably should have waited, but it is what it is. And you don't buy it when something prices out. No matter how much you love the story, you understand the story, you don't buy it because you have nothing to trade against. And this is a great example of that. So we'll just go day by day, and you're waiting for something to trade. So it's one day at a time. You're just coming down, and look at this. It was at over $50. Now it's down to $35. And now it's, how low did that get? It got as low as $32. Again, it has not given you a buy signal. It's just gone straight down. Now it's down even lower. How much was that down that day? Down 15%. And now it gapped down. Now you're even lower. And October 8th, and let's see what the market is doing at this time. So the market had collapsed. So it had gone public over here, and it's in the fact that it went straight down. It's not in isolation. It went straight down because the market went straight down, and if you're in that time frame, the market's collapsing, and you should be selling that. So anyone who bought the eBay should be, even got shares from the offering, would want to sell in this, because some of these go down to zero. It's just a fact. And like I said, I studied all of them. So you still don't buy it. Yes, I know the people in hindsight will say, okay, well, you gap down, capitulation, close at the highs, you should buy it. And I don't think it ever goes lower than that. But no, there's a reason why you say you don't catch a falling knife, because, would you have bought it on this day, because it's so low? No, I mean, there was no reason for that. It was going straight down and looked like it was going to go lower, and then it did go lower. Like, I could see someone making the argument for an upside reversal, but the same thing would have happened on this day, right? Let's go back a few days. Same person making that argument could have said to buy it that day because you had an upside reversal, which looked even better because it was a blue day. And then the same thing on this, it was a blue day. Now, you did have your total capitulation down there on this gap down. Let's go back down to the gap down. You get a gap down, cleans everyone out, closes at the high, so it feels like it's getting support. And this is back when volume was clean, and so it was the highest real volume day in there. Whenever a stock goes public, you want to exclude the first 2 days of trading, just because of the market mechanics. So that was pretty high there. But let's go forward a day. Still no reason to buy it. It's just bouncing, normal bounce. You know what? This was actually a good day. This was your first real good day because it was at equilibrium. It tightened up. So that told you that it's still not giving you a buy signal, but it's your first sign that people are starting to get a sense of, how, what this should be priced at. So let's just do a little calculation here. So 54.25 54.25 minus, how low did this get? 25. Is that 25, 25? Okay, 25 divided by, what did we say? Oh my God, that's a long week. 54, 25. So if I did that right, long week and all, that's saying 53.4% that had declined. That is very steep, but again, look what the market did during that time. And so it's bouncing up, and the market is bouncing up at the same time. So we'll go back to eBay. Let's go another day. Still no reason to buy it. It's coming in. But you can see the spreads are starting to tighten up, and that's telling you that people are comfortable in this area. And so now you're looking for it to either move above some levels or just keep floundering down here, but you're not buying it. Now, this would be your first signal that is a potential buy. This would be very, very, very aggressive, but let me blow this up a little bit. Now, most people should not buy this here, but back then I wouldn't have bought this here, but now I would consider it. And the reason being, because I've continued studying these and I've realized that when an IPO comes down and turns around, if you get in early, you can get some low cost basis stock that could be just priceless for you later on to help you with some of the wiggles and wobbles. So this would be the first place that you could buy it, because you have a stop that you could use, which would be the low of that day's trading day. So you look at the bar and you go, okay, well, I could use the low of that day. And that makes sense. It shouldn't go back below it, because notice it's finally taking out the first time that it's formed an area of resistance right there, and it went through it. And this is like this little consolidation for a week. Now let's see what the market is doing. So the market, it had a follow through the day before, right? So you got your day 1, 2, 3, 4. So let's go back a day. So you had your follow through day there, up 2%, volume higher than the prior day. And this is your day 1, 2, 3, 4, day 5. So it's your follow through day. So you can start buying stocks. And on that day, eBay was just there, wasn't buyable. But now on here, you could start buying it if you wanted to. Now, it's also the context of where the market was at the time. If the market had been ripping up and it fell like this while the market was rallying, then no, you wouldn't want to touch this. So that's why it's always the context of, it's a three-dimensional chess. Was it logical for it to fall as much as it fell? Given the market environment, yeah, absolutely. Could have fallen more, frankly. Okay, so now on this day, you would be adding to it. So, let's go back and just show the problem. So the problem with buying it on this day is your stop is going to be the low of that day. Let's call it $30.13. So let's call it 30. Well, and you're not buying it until it takes out really kind of the high there, the 32.25. So 32.25 down to 30, that's a big percent loss. And that's where you would have to place it to know that you're wrong. And that's a really hard thing to do. But then again, this was an IPO in the 90s. And so what you would do there would have to be, if you want to use the chart as your guide, you would have to adjust your position size down to be able to withstand an 8% or 9% loss that you would be taking before you would know that you're wrong. Now, you could always just do it at a 2 or 3% loss, but that would get you out probably around here, which would be a normal movement. Frankly, I do that a lot, and it gets really frustrating because, you sell it for risk management, reasons, and then you just look at the daily chart and go, it hasn't done anything wrong, but you have to balance those two. It's really a struggle. So you had bought it on this day, small. because your stop was 8-9% away. Now it does what you expected it to do. So this is where you would want to be adding to it. So again, this is for the advanced folks who have done IPOs in the past. Normal IPO bases, as we discussed with the Google, really isn't until you get back above either here or here. But this is this is kind of an advanced thing. I'm just trying to walk through how I would do this now. Again, I wouldn't have done it back then because of all the overhead. Obviously, all the people that bought in the 50s and the 40s, they're thinking, wow, if I get back to even, I'm going to go ahead and sell. So you've got a lot of sellers there, but let's look at what the market was doing. Oops. And the market had the big move the day before, but just a tiny move there. So it's outperforming in a big way there. It's up 10% on a day that the market is only up 0.62. You see that up there? So that's significant. So that's relative strength. Now, it's really hard to use a relative strength line this early from an IPO because the scaling and everything is so off. You really need more time. And I don't have an exact number of days to use because it really just depends on the volatility of the market. If that would have been in a just kind of a sideways time in the market, maybe you could have started using the RS line a little bit. But at this point, because we've been going straight down, you can't put too much weight into it yet. Just being honest. Now you have this big, massive movement. Look at it, up 26%. So what I'm doing is looking at each one of these highs as an area of resistance. So as you're going through them, adding to this. Now, again, that's another advanced, pyramiding type of thing, but you're trying to figure out, is this something special? And with the moves that it's had, like what it was up, 8% here, 10% there, and then 26%. So those moves are building on themselves. Whereas, when we looked at the market, it had this big move over here, the 4%, and then it didn't build on it. It was only up a fraction. And then, well, that was a decent gain, 1.7. But let's see. Yeah, even typing wrong. Okay, so now you're adding to it more because you've got some low cost basis stock here. You've added to it here, throughout the day, and when it went through there, you added some. When it went through there, you added some. When you went through there, you added some. And when you went through there, and when you went through there, or at least you could if you had the room in the account, but also knowing that what would be normal and natural. If you move, my thing is always 50% retracement. So if it goes from here to here, well, let's just calc that. 32, 20. Hold on, let me get my calc out. What did I say that was? 32.25 up to 46 plus 46 divided by 2, 39 and an eighth, 39.125, 39. So yeah, so basically it could come into here or a little bit, in there and still be normal and natural. So you want to, in fact, that should be your base case. That you should always expect that a stock or an index to be able to retrace 50% of its move and still be in its original direction. So you have that in the back of your mind going, okay, I think this eBay is very special and it could come all the way in. That's a long way down and still be normal. So how do you protect against that? So there's a couple ways you could do it. You could either have a smaller position size, which is probably the most prudent thing to do, because you're taking on a lot of risk. You're early in this bear market turning into a potential bull market, and you're playing with fire, right? The stock that can go up 26% in a day could go down 36% in a day. But what I would suggest doing, well, can't suggest anything, I got to be careful what I say. Like, this is not investment advice. Let me stop. I'm going to stop this for a second. I just got to be careful with this because I don't want people to take things the wrong way. I'm not an investment advisor. I'm just a random dude on the internet trying to tell stories and help you out. If you want financial advice, go seek a financial advisor and get it there. Anything I say is not investment advice. I do offer music advice. My music advice is always right. You should always follow my music advice. But not investment advice. That's an investment advisor. I consider myself a music advisor. Yes, an official music advisor. I need like some letters after my name. Anyways, we will get back to our regularly scheduled show here. And make sure that's all working. Yes, it's still shared. All right, so now we're going to go forward. Oh, wait, let me see. Yeah, all right. And so some stalling, ran into some problems there at new highs. But frankly, I would have been buying more here, right? Buying some more here, buying some more here, buying some more here, buying some more here. And then it backs away. And that's why you really want to be careful. So now you got to keep in mind that it's gone from, what did we say, 32. Let me get out my calculator again. 32.25 plus, what did it go up to? 51.88. A few cents too high, I would say. Divided by 2. So 42.06. So 42.06. So it could come all the way back into there before you know that there's even anything remotely wrong. So again, what I would suggest doing is put that in your spreadsheet with the number, with the size of the position, and just look at it and say, could you withstand that? And frankly, it could come into here looking at the chart and still be normal. But it's always just a tool that you want to use, that 50% retracement. Always look at those and then back into it, and that will help you with your risk. So nice. An inside day, closing at the highs. That is probably, besides this day here, the tiny little day, this day here, that was probably the most important day, because this tiny little day, it tightened up and, didn't have a lot of movement. It told you everyone was fine with that area. Then this day was super important because it was the first day that it went above a resistance area. Before that, it was just going straight down. And now this is your first real constructive inside day. I mean, this was a constructive inside day, but then it fell apart from there. This is your other really first constructive inside day. But you don't have to take any action on there. But this day you would want to take action because it was taking out that high. I would add some there, and I would add some there. Now, how much? It doesn't have to be a lot. I mean, I remember when I shared an office with Bill, I only saw him buy things that were green on the day, things that were up on the day. And he would often just call up to buy 100 shares, just 100 shares, because he was trying to put more, and 100 shares for his size account was nothing. It was just absolutely nothing. And it would be like you buying one share, or maybe even less. But he was just buying, is more psychological than anything, but also, slowly building up a position. Now, an inside day, not doing anything wrong. It's constructive. Ooh, wow, I forgot that. So now you have a decent position in it because you've started buying here, added. Now you get this big gap up. Look at that, up 46%. And this is back when volume was clean. And you get this massive volume spike, the biggest real volume of the base of its trading thing. And it's breaking out of this very deep IPO base. Let's see what the market was doing. Oh, the market's firming up, but just been inching up there. Is really outperforming the market in a material way. So now you've got this big giant move and closing at the highs. It looks as picture perfect. as possible. So I'm loading up on this day. So again, you're trying to tell yourself what you would do if your head is screwed on straight that day and you're not making mistakes. And that's how I like to walk through this, is realistically, what should you do? It's just kind of like a golfer that goes to the driving range or whatever and is just practicing. That's what we're doing. We are just practicing what you would do in the battlefield. Or it's, like someone who does martial arts who's practicing in their dojo and everything. And then if they have to get into a real fight in the real world, not in a tournament or something, then they can fall back on their training. And that's what this is about. And so you want to ask yourself, you've got to know what you would do on every bar. And so in this case, I'd be gunning it, because you've got some really low cost basis stock in here. And now you've got this huge move. Sure, it could, if it went up 46% in a day, it could easily come down 56% in a day. So you need to adjust the size. And I was trading this back then. I just don't remember how I traded it. But it was, I was certainly trading it a month or so after this. I don't remember for a fact if I was trading it right here. But anyways, this is super powerful stuff. But you want to realize that a normal, healthy day the next day would be something like this, right? So you don't want to push your cost basis up too much, where something like that, which would be healthy and normal, would kick you out. Now, if you had a bar that did this instead, came in and closed like this, or even over here, you've got to be out of it, because that's, not there. Like if it closed down here, that wouldn't be normal. It'd give up all those gains. So it's really about position sizing, and that's a personal thing. Like what I would do is not going to be right for you. You need to, and what you would do is not going to be right for me. You got to ask yourself, what would you do? And a lot of this is going to be protecting this by selling off other risk assets in your account, because you're playing with superheat. So let's go forward. Wow. See, I have completely forgotten what happened. Like I forced my memory, that the Men in Black device thing, just press it to forget what happened. I mean, I know that it ends up going and have a big move, but I don't remember how it gets there. So you had even more volume than the prior day, even though you only went up 12%, only on a relative basis, and your close was not that strong for the trading bar. Still very powerful. I can do bar by bar. We'll be here all year. So I'm going to start going a little bit further now that we've got no reason to be adding to it up here, because it needs to settle down a little bit. Okay, it's starting to settle down. Oh, let's go back. That's good action, because look at your best days are those days that are super tight spreads. Is closing just unchanged, and you had a dry up in volume. That was back when volume was good. So that's why you'll hear me talk about it here, because I loved using volume. We don't have an accurate. Okay, so now it's coming in, and look at that closing range there, 49% closing range. So that's very normal, getting support there. So now I wouldn't buy it on that day, but now that you've come down for a few days and you've gotten support, and this area is really very tight compared to this move, I'd be looking and saying, you know what, if it takes back out this high and adds a little, and if it takes out this high and add a little bit, and if it takes out this high and add a little bit more. But let's see what ends up happening. So I add a little bit there, very constructive, but it could still doodle around for, 4 or 5 weeks, and still be, now it would be abnormal for something to move that fast and then go sideways for that long. Oh, wow. Okay. 22%. Shoot. Okay. You got to gun that thing, man, because it's taking out this high, it's taking out that high, it's taking out that high. You got to be adding to it. So now it's going through the Livermore round number of 100 and everything. And trying to think of this is when yeah, this must have been when it was. So when it was here, no, it couldn't have been. I'll circle back to that. Remind me. High tide flag. So broke out there. Maybe that was it. Maybe it wasn't. I'll remember afterwards. So I think the weekly looked different. So this is super powerful. You're adding to it. But now you're saying, okay, now you've raised your floor on there. It shouldn't come back and undercut this level. So any of my stops on here, I'd be raising up to this level because it wouldn't be normal and natural to break out of this little shelf area and then come down and come all the way in there. So now I'm feeling a little bit more comfort because before, when I was on this day, I'm thinking, oh, wow, it could come all the way into here or maybe here, and I'd still have to hold it. Now I can sell it there, and we've got low cost basis stock. So now you're really playing with the house's money. So my biggest struggle would be, frankly, buying too much of it. I know myself, I would buy too much, and then in an interday, I'd get shaken out of stuff. It just happens to me, man. Wow. Jesus. Wow. Oh, I miss the 90s. That was powerful. 27%, massive volume. You can't be adding to it up there. And you see this down 11%, and that's normal. That's healthy, very healthy. An inside day. You want those. It cleans people out. And it gets my size smaller for when, I've gotten ahead of myself. Well, that's tightening up. I think this was the time. Yeah, this was it. Okay. So it was right in here. It was either here or over here. I just really can't remember, to be honest, that I said, wow, this is like that high tide flag that Bill talked about in his book with Syntax. And I was in our research department at one. I'll just stop share for a second. And this is another reason why I say to be kind, because I just remember all these things. So we didn't have access to the model books. I saw some comments from people like, oh, all the model book PDFs should be out on the internet, which I love because I would love to have them. I had to leave my model books back at the firm, even though I created them for 2 decades. But, they're kept under lock and key. Like they're very, special things. So back at that time, I was not a PM in 98. I didn't become a PM until late 99. That I went to one of the PMs. You weren't supposed to like talk to the PMs, like leave them alone. But I went up and knocked on this one guy's door. And I'm like, hey, my name is Mike, and I work in the research department, and I'm studying high tide flags. And could I please borrow a model book that has syntax in it? I want to study it. The dude doesn't say a word to me. He's like annoyed that I knocked on his door, gives me the book, walks me over to the photocopy machine and stands over me as I photocopy it. And I hand it back to him. Oh, thank you. I was just so happy to even have any interaction with a PM. He doesn't say a word to me. He goes back in his office, closes his door. Kind? Not kind. So those things stick with me, and I'm like, why do you have to be like, oh, hey man, that's cool. Yeah, there's also these other high tide flags that you can look for, help someone. But look, it's a dog eat dog world, and as Norm told us, some of us are wearing milk bone underwear, so it's very competitive. So no one wanted to help anybody, but that's just clearly not how I'm wired. I like to help folks. So anyways, I always remember that and just going, wow, if someone asks me for something, like, unless I absolutely don't have the time, like I'll just be kind. I might say I don't have the time right now, but I'll at least be nice about it. And so, yeah, be kind. We'll circle back to that at the end. But that dude probably doesn't even remember, but I remember who you are. And we feel the same about each other. So, all right, let's leave it at that. Don't want to get Webby in trouble today. So the point was, I recognized that this was really a high tide flag in spirit here, and then forming another high tide flag, which if you go and you watch the Axon, which was Taser episode that we've got, that one built that same thing, and that was the same thing as what Bethlehem Steel did in the 1915, 1916 time frame of high tide flag on top of high tide flag. So different than Syntex. Syntex was just a high tide flag and had this beautiful 6-month move. So that was its character: move up, hold in tight. So now you've got your stop here, down in here off of this stuff. Now you can raise it up, into like maybe into this area, because that wouldn't be normal to go up there and then come back. So you're raising your stops up, because we don't really have, enough time on here to be using the quicksand Grateful Dead rules, because of one, the function of the general market, of when it went public, right in this time frame. So you've got this weird V-shaped recovery during the time that it's public. Now, obviously, it was a double bottom, or you could say it was 3 waves down, all sorts of ways of interpreting it. But you do want to look at the context and just go, using the quicksand Grateful Dead rules this early on, given that context, is you got to take it with a grain of salt, and you want to look for other things to use. So at this point, what I would lean on is, my favorite is the 21-day, which is your green line here, your moving average, 21-day exponential, and watch the episode on that, even though that was focused on primarily the market. I use it heavily with stocks. And anyway, so you're this ledge, now you've raised the stop up to at least up here for part of it, and probably in here for the rest. You're going to throw in the towel if it goes underneath there. So you're kind of locking in. So like worst case scenario, unless you get this massive gap down, you've locked in a really sizable gain. Because remember, you were buying some down here at 30, in the 30s, not at 30. Now let's go forward. Okay, now it breaks out of this. So I am gunning it beyond belief here. But I also know that I'm pushing my luck. But now I'm going to raise my stop up on at least anything I bought on that day to maximum here. And maybe even, selling some before then. But I'm going to gun it hard, because who knows how far this can go. And then for the rest of it, I'm raising my stop up to this level now. So that's now my worst case scenario. And that's what Bill would do a lot. He would have lines in the sand on a stock, and he was great. There was no one like him at letting things run. And his lines in the sand would be a lot lower in the thing. In fact, if he was trading it and had that low cost basis, his line in the sand would probably be down here or down here. He could let things wiggle a lot more than I could. But then again, there's only one Bill. All right, so let's go forward. Okay. First sign is a little odd, right? So let's think through here. We had a breakout down here, like a mini breakout, and then we went higher. We had a solid breakout here, and we went higher. We have a breakout here, and we went higher. Now we have a breakout, and notice it's a little different. You didn't have the type of volume that you had before, and you're already having a downside reversal. So I'm telling myself, man, you probably pushed your luck. You probably got a little too heavy. And so sometimes, you can just back away early with some of the shares and just go, you know what? Maybe I've built too big of a position. Now, if you've done it right, then you're just sitting tight, right? And just probably using this as your main stop, and this is your stop for your ads. That's the most logical thing to do. And then the 21-day is almost up there. Once the 21-day passes that, you could switch over to that. Let's go out another day. Okay, good. I was afraid it was going to come in, because again, I've purged what it did out of there. Oh my God. Jeez. Where is this stock when you need it? Oh my gosh. Well, I was trading it back then, but man, I really don't remember what I did. Wow. Okay, now that's a little odd. Really a lot of stalling. You see this spread is really wide and wild up here, and then closing like it in its it's running into trouble going through a round number, versus how it just powered through it through 100. And now at 200, it's having trouble. But still, I would then, what you're doing is figuring out where to raise your stops to. So the stop that I had on here, I'm going to raise up to here. So now, you know, I'm at gains on everything. So you're trying to let it wiggle and wobble. I'm telling that to myself because I know that my instincts are to want to sell a bunch on that, because that's really a bad bar. You got to pick up on volume and you close mid-range stalling, trouble at 200. That's telling you my expectation is for it to come into here, but I'm going to try to let it, stay above here. Let's see. Wow. That's good. Let's see. That's really good. That's what we were expecting before. So it's not that bad because that's what we were expecting. As long as you now stay above this, it's just doodling around in its price discovery. Not easy to sit through. That's 9%. So now that's beautiful. So now you've got an upside reversal. So if you had sold any, right, that, whatever, you got spooked out of some intraday action or anything in here. Let's look at the market. Wow. Okay. That makes sense. So with this in here, if you did have room in your account to increase it, you can increase it with this upside reversal and then use that low as your stop for those shares. So now at this point, I would raise, because the stock has made a stand, and I hope this is all making sense to everyone. And I know we're taking this bar by bar and everything, but there's so many moving parts on here. Yeah, there's really no way to do it other than just say, okay, you buy it here and you sell it way up here, and hindsight BS. So this is what I would say is, with this one, you could use the low of that day as your stop and be adding to it, and then start raising your stops up on some of your other positions. You don't have to have your stops all at one level. So you could have some at this level, some at this level, some at that level, some at this level, and some here. I would have moved it up from here now up to here as your worst case scenario. And really that 21 day is now really coming into play. You can see it there right at kind of 150, or is that 148 and change. That pretty soon I'm going to start leaning on that one to let these wiggles and wobbles happen. We go on to, hi Sherry. That's my sister, my older sister. And I know she watches all these and she doesn't trade, and it just warms my heart. And she'll send me a text with all her comments on it. And it's just the most wonderful thing. And she tells me that she likes the rambles, to do more rambles. So I'll do my best. And anyway, so not what I was expecting here, frankly. Okay, that's starting to get a little weak, but again, that's okay. So now I'm just thinking, okay, the shares that I bought on this day, I'm still keeping the stop there, but my 21 day is what I'm going to try to keep the stop at for the bulk of the rest, and maybe have a little bit of a stop there and a little bit of a stop there, but that's the worst that I want. You don't want to have this massive gain and let it turn into a loser, but you also want to try to let it play. And that's really, really hard, man. It's really hard. Well, hindsight, it's easy. So here, okay, it went through that level. That's normal. So normal that it sold off as much as it did, because it went through levels like, everyone sees that, right? Everyone who understands charts sees an upside reversal failure. So they've got their stops in there. So the fact that it had a waterfall sell-off there is normal. Not fun, but normal. And then it took out this level. So other people would have had stops there. I probably would have had some there too. But it got support at its 21 day right there, and was able to have a 59. You see that? The 59% closing range. That means within this bar, it closed in the upper half. 50% or higher is upper half. And so they got support by the end of the day. So I wouldn't be buying it buying shares back, but I certainly would have sold the shares there, and then saying, okay, I wanted to hold the 21 day on a closing basis, and certainly that level and that level. Let's see if we can get out. Something tells me we're going to get shaken out. Oh, that's actually constructive. I know it's down 4.5%, but that's a tight day in the state above the 21 day. Another tight day, constructive. That's bad action, because you see how it tried to move up and then couldn't hold it and came back in. Not good, but no reason to buy or sell. Very constructive inside day. Ooh, okay. I'm probably adding some back here, because now you went above, closed above that last inside day. And so I could add, if some of the shares that I sold here, not all of them, I'll buy a little bit back, but then I'm going to keep a stop on those at here, here, and here, like the low of each day gradually for any shares I'm buying there. So it's just a nibble. Not the wasn't an expectation breaker, but it broke my expectations because it looked like it wanted to go higher. But so now I'm probably raising my stop up to here and here on those shares that I just bought. Ooh, okay. This is what I call a setup day. And I don't know that it's going to work, but a setup day is when you're next to it, and it's something I came up with. I don't know if someone else also had the term setup day, but this is my terminology. And the reason why I say that is because, Bill didn't let you use outside terminology. So if you came up with your own stuff, it was like, what could he say? I call this a setup day. And why? Because it looks like it's set up to go higher. It's right underneath a round number of 200. It's been, base building here, so to speak, you know, tightening up relatively over the last, 2.5, 3 weeks or so, holding above a rising 21 day. And now it's a tiny spread closing at the high. So the expectation is that it wants to go through 200 the next day. Now, someone else could look at this and say it's been wedging, meaning it's, not undercutting the lows of the prior day, which it hasn't for all these days. And both people would be right. So some of it is weak action, and that you like having shakeouts below the low of the prior day because you get rid of people like me who put their stops there. So it's a little bit, it's mixed. That's why I said at the beginning, this is very difficult, because you could easily see this being leg one of a double bottom, right? You're always trying to think of like, what pattern could this be? This could be this. And then that means you're going to get shaken out of everything and have it turn around and go higher. So incremental ads, like a little baby ad here, not a major ad, but also getting ready to be selling and probably getting shaken out. Let's see. Oh my. Wow, I missed this market. Jeez Louise. Good thing we added some that day. I would be adding a ton here. Wow, man. It's very similar to Bethlehem and Taser, because look at that, like the high tide flag and spirit, high tide flag and spirit, high tide flag and spirit. Now, what's different about this is much looser than those other ones. So I'm not as excited about it, frankly, but still super powerful. So now any of the shares that I bought back over here, I'm raising my stop up to, this level here, because, and probably even this level on some of them. You're always trying to raise up your stops, and then you've got your 21 day for the bulk of it, and then maybe here and here for the rest of it. So again, worst case scenario, those shares, all these shares there, you're still at a huge gain at. And it's really, you can see this, you're really trying to strike that balance between not getting shaken out early, but also not giving back too many of those gains. And wow, that's just a monster. Guess you're going to have to add. Wow. Wow, did not see that coming, from $200 to $300 in a blink of an eye. That is just unbelievable. It's too extended to buy. Now it's holding in there. So you're using that 21 day, here's your 21 day, and just saying, okay, at this point, I would use this high as a stop for some of it, this high as a stop for some more, and really the 21 day as the bulk of it. And let's go forward. Let's see, wait. Oh, that's Christmas. Okay. That's kind of funky. Huh. It's actually relatively constructive, but just a little out of character. Because notice, like, you normally don't have, look at your blue to red ratio or blue to pink ratio on there. Most of the time, you don't get a lot of pink bars in a row, down bars. So now we've had 4 down bars. The only other time we had 4 down bars is over here. So always try to pay attention to that ratio there. So you really, it feels like it wants to do one more, which, and it's right around the end of the year. That's tricky. It's not giving you any sell signals, so you got to hold, but man, that's a tough hold. Yeah, that's about what you would think. I feel a little better now because it felt like it needed to do that. So now you tested your 21 day and got support there. But it looks weak, right? It doesn't look, that's why we went back here and it was like, 4 days in a row. So it's really started looking a little weird here because it was like, you had the outside day, so to speak. It closed within the bar the prior day, but you traded outside of it and had trouble there at 300. But it was the end of the year. Holiday stuff is really hard. You couldn't have really said that was a sell signal because it wasn't. And that wasn't a sell signal. You just had an expectation of it moving lower. And it did do that. So it met your expectations. If it would have had this big day like this out of the blue, that would have been different. But let's see what the closing range is. 58% closing range. Interesting, because we had over here was 59, right? So it's same spirit there of the test of the 21 day. But now I'm going to really put a stop, here. So this would have, triggered on some sell signals on that and stopped me out of some of the stuff, but it didn't close below the 21 day. So we're going to give it more room until we get a close below the 21 day. Looks like it's probably going to happen the next day. Let's see. January 1st. Okay. Test of the 21 day, not a close. Okay. Close below it. That sucks. Like we saw it coming, but we were hoping that it wasn't. And you can hope when you've got a gain. You can't hope when you're at a loss. So we were trying to give it the benefit of the doubt. But I think at this point, your RS line is moving through its moving average. But again, it's too early to really use the quicksand Grateful Dead. Here, you're starting to be able to use it soon, but let's see what the market was doing. Man, that makes it even worse because it was coming down as the market was going up. So just under distribution. So I'm probably, maybe I'm holding some shares still just because I've got some low cost basis stock to down there or maybe even to there. But the bulk of it, closed below the 21 day. And I'm going to say, you know what, I'm going to exit those because I don't want it to round trip on me. And, I'm going to wait until you not even consider buying it back until it gets up there. But really, it feels like it's under distribution right now and needs to form some sort of base or something. But that was a huge move. I mean, look at that. That, even if you got it at that low of the day, let's call it 2020, because the low was 1975, you started buying it at, what is that, 32 and change. That's a huge monster move. And frankly, we weren't shaking out that much. I was thinking we were going to be shaking out a ton. Let's see what how the rest of this plays out. Are you kidding me? Well, you know what? You got to buy some back because, wow. But I wouldn't buy a lot back, frankly, because it took out these levels, so I buy some back. But what is that? It's not really a recovery off the 21 day because it fell in such a weird way that was out of character. But I'd buy some back, but I'm not going to buy a ton back. And then I'm going to use the 21 day and this day's low as my stop for any of those shares. But man, very, very frustrating. But you got to buy it. I'm really wanted to form just something with a better risk reward. And so it goes up. I don't want to add to it up there. I probably am. Yeah, it's a tough one because it's really nothing. Bill would say there's this thing called straight straight down, straight back up to new highs, and it's a sell signal. It's really hard to interpret. And the way he would call them is like on weekly charts, like 1 week down, 1 week up to new highs, or 2 weeks down, 2 weeks up to new highs, or 2 weeks down, 1 week up, or 1 week down, 2 weeks up. It just all these variations and the theme of it and the spirit. And he never really clearly defined it. But it was this thing where it when you see it, and this is what it looks like, is when you get this really bad break and a move back up to new highs without it making sense on the chart. And this one just doesn't make sense on the chart. So I'm not going to say I'm going to sell it here, but I'm not going to buy back. In a perfect world, I'm not going to buy back. But you get the FOMO in your head going, wow, it went from all the way up to 100 in a blink of an eye, 100 to 200 in a blink of an eye, 200 to 300 in a blink of an eye. Maybe it's going to go to 300 to 400 in a blink of an eye. But so you have some, but not a whole lot. And I'll be using the 21-day there for a lot of my stuff going forward. That's actually constructive because it didn't fall apart after it there, but I wouldn't be buying it, but we want it to tighten up. That's good. Ooh, not good. Okay, well, this kind of goes along with what you would expect. Like, I feel better about it now because I really thought it was going to go up to 400. And now you got a decisive close below your 21-day. And you had your straight down, straight back up into new high ground. And now you're down 17%. And it really feels like the character of this has changed. So you got to ask yourself, if you still have some very low cost basis stock, maybe what you do is you just hold some that is still underneath there if you still have some shares. But certainly anything bought above 100 is got to be long gone, and I would hope that I would just be out of this. But then on the flip side, it has been trading for a while, and you could say that, you might want to wait for that RS line to go through its Grateful Dead moving average. So that's why I said at the beginning, this is tough. Some of these are a touch of gray, and some of them are a lot of gray. Like, it's really hard. So what would you do? Like, be honest with yourself, and then do this again, but put out of your mind what happened, and just be really intellectually honest with how would you do this, and what is your expectation now at this point. Like, my expectation now is it could be at 200 the next day. So where is my line in the sand for any shares I still hold? Because if it were to collapse down to 200, what would that be? That would be something in need of another base, or maybe not a traditional base, but at least like something like this, or something like this, or even something like this. But now it's a nothing. So it's really dangerous. I would hope that I would be out of it, but let's see. So it goes lower. So yeah, I think you'd have to be, out of it there. Yeah, it's up, but now its high is underneath the 21-day for 2 days. So I don't want anything to do with it. Now 3 days, your high is underneath it. Now it's wide, right? So this is not making sense. So let's see what the market is doing. And the market's ripping up. So the market's at new highs and the stock is struggling. So you're hoping to stay away from it because what pattern is that? If you see some sort of pattern, let me know. Now let's step back and look at the weekly. Even the weekly looks bad. We got a decisive break below your 10-week line. So let's go forward. Now that's weak. Now you get a break of your 50-day. So you got to be out. Like, no matter what, you got to be out, because let me tell you, I've studied all of them, and a lot of them come down to here, man. They really do. When they roll, they do. So I hope, well, let's just go forward and see if this, did it do anything else? Okay, it's underneath the 50-day. Okay, so you get the gap up. It's really not a viable gap, because what is that? It's just it's got to be a news gap. Like, It's a, I don't know how to buy that. Like it's just a gap up after loose action. So I just can't buy that. That's better action. That's actually better action because it's not closing all of that gap. That's actually constructive, but I wouldn't want to be in it. That's not so constructive. That's constructive. So let's go through these things if you don't pick up on why. Okay. So why is this constructive? You have this big giant gap up, and so you're looking at it and saying, okay, from here to here, where's the 50%? Let's call it here. Saying, okay, I could give back that much and still be okay. And now you've got a day where you undercut the low of this trading day on the gap, and it doesn't fall apart and your volume doesn't pick up in a major way. So that's constructive. Now, the next day, well, it doesn't go higher at all throughout the day, just a tiny little bit right there, and then closes at the low. The only thing good about it is not a massive spread, but the spread is bigger than what you would want it to be, and it is still above the 21 day. But it's 3 days down and it's weaker now. So look at the percent moves down. So down 3.58%, down 5.13, and then 5.6. So the declines are getting bigger, which is a sign of distribution. If those were in reverse, if it was down 5.6 and then down 5.3 and then down 2 or something or 3, then it's a sign that it's getting support. So that's some bad action. This is actually good action. Okay. So now it's only down 3% or 2.96%, and you've got a high closing range, 61%, and you got support at the 21 day. So now I'm looking at this and saying, okay, well, it's not a true cup with handle, but now at least I have something. It's this cup with handle like type formation, cup handle, so if it breaks this, that I would consider buying it. And really, it got support at your 21 day. So now it's telling you that the 21 day is relevant, closed enough of this gap in here. So if it took out that level or that level, I'd consider buying some. How much, depending on how it happens. Okay. So yeah, I'd buy some here, not a massive amount. I mean, look, that volume is a little suspect. It's funny talking volume, but when I'm looking at historical charts, I'm going to talk about volume because volume is very important. It's just dirty in my opinion. Now, at this point, if you're buying it, and if we get a good gain, let's say, because I don't remember what happens, but let's say this goes up to 400 or 500, then you can use your RS line moving averages, quicksand, Grateful Dead at that point, because we've been trading for a while. But let's say we can't use those until we have a decent gain. So for now, we're using yesterday's low as a hard stop. You can't let it go below that, and you probably wouldn't even want it to go below this low. But yeah, I'm going to be buying some. And my expectation, if it's healthy again, it's going to rip through 300 within a week. And if it doesn't do that, then it's suspect. Well, I call that suspect, so I'm selling that whole thing. So I bought some, sold the whole thing down 14%. But you have to be willing to do that. And now the next time you go through this, when you do it, when you see this, don't go in the back of your mind and go, oh, I remember what happened, so I'm not going to buy it there. No, what would you do? Dude, I would buy it there. Even knowing what had happened the very next day, I'm going to buy it there because I don't know what had happened the next day. And was it a great setup? No. Was it an okay setup? Absolutely. Absolutely. So now you're out of it. That is just junk. And look at all that volume in there. That is weird. That is weird. Let's go. Now it's living underneath the 50-day. It's just slop and chop. My friend Arusha would call that the chop fest. Okay. It's, but what is that? I don't even know. It's a recovery from the 50-day, up a bunch, volume picks up, looks like it wants to go higher. RS line is picking up, but I just don't know what pattern that is, So I'm not going to play. but I think I'm going to regret that. Okay. Now there's something you could trade against, a little mini upside reversal that you could use the stop there and there. So I wouldn't be trading in a big, let's say that my position size from here, during that time was like a 25% position. If I could withstand that much volatility, then at this point, it would just be like a 5% position, like, that much smaller because it's a different animal. And we've had so much distribution during this time frame. But that's an entry at least. Oh, there you go. Now you can add to it because you got some the day before, right? With that upside reversal. Now it's doing what you expected, is going through 300. Now you can raise your stop up on all of it to the low of this day, certainly on a closing basis. And now it's gone through those highs. So you can be adding to it. Is this a great base? No, it's actually a terrible base. It just frankly is. Let's look at it on a weekly basis. Let's do a week by week analysis. So if you went through here, first week down from your closing high is how Bill would refer to starting of a base. So here was your closing high. This is your first week down. First week down 23%, closing range of 12%. Nothing good there. The only thing good is that it did find support at its 10-week, the red line. Next week, everything's bad about it. Falls through your support, falls through your 10-week line, closes down 12%, and your closing range is 37. I mean, there were some cases where Bill was fine with 38 or 39% closing range, but really we wanted 40 or higher. So it's just too low. Next week is constructive. That it's a good week. Up 41%, 72% closing range. That's a good week. Next week, even though it's down, it has a poor closing range, and it does close back underneath your 10-week line. It is an inside week, so that's constructive. Next week, upside reversal. That's constructive, but can't get back above the 10-week line, which is not good. And then your next week is really negative. Yes, it closes 72% closing range, and it's up on the week, but its high is pretty much stuck underneath a 10-week line. So that's weak. And if you just look at that, it's really wide and loose, but we'll see how it plays out. We don't know, and we're going to keep an open mind. And so we've got some, and we've got our stop. Where is your stop? It is? Okay. That's logical. Okay. Not what you want to see, right? It doesn't fail, but that's not the way a stock should break out, a high octane name like that. Stalling, and you can see that the volume had picked up even more. That's, if you sell the whole thing there, that's fine. And if not, you put a stop there and there. That's not good action. I don't think I'd add to it because that just wasn't good. Let's see what the market was doing. Okay, so the market's in trouble. The market's underneath the 50 days, so that's a little bit more forgivable. But also, with a market like that, you're not stepping on the gas. So I would just keep whatever I still have. I don't want to really add to it. You don't always have to be adding. And now it's too extended to really add. And look, it runs. That's what makes this so tricky. So you've got some there. Did we miss anything? I don't think we did. I think we were being realistic, and this looks like it's going to go a lot higher. And so you just have this tiny position. At least you have some, right? But, some is better than none. But I don't think that you could, even knowing this, right? It goes up 23%. Would you really want to load up on this day? Buying some on this day and adding some on this day. But would you really want to add after that day? I don't think so. But that's just me. So now it's going up without you, and you've got to fight that fear of missing out and just go, okay, well, how can you handle a runaway stock like this? Now, one thing you could do is, let's say you've got you're in a situation like this and you were shaken out of something. Now, this is not something that Bill would ever say to do, but I think this is kind of how we would do things, is just slowly be buying a little bit each on up day. And any one day is not going to be a material amount. So let's say you had a 5% position over there, and then you just added 1% on any move instead of really ramping it up. And if you added, let's just say, 0.5% on this day, and then maybe 1% on this day, and 1%, and maybe 0.5% or 1% there, at least you're making that, instead of being a 5% position, it's closer to an 8 to 10% at that point. It's just slowly adding to it. But it's really tricky, because when you're adding as something's extended, you're really raising your cost basis up a lot, and a lot of people don't like doing that. And when I do that, and it messes with me, it's not a good habit, but it is one that I've developed, because lots of times I'll be in this situation, just go, well, that's a leader, I got to figure out a way to build it, make it bigger. Because look, sometimes this stuff happens, but still, at this point now it's so extended, you got to wait. You can't be adding more to it up there, and at least you have some. That's why I was saying this was such a hard one. Now up 66%. Let's see if it gives us something to come in. 3 days down now. Okay, 4 days down. Remember what happened last time? We got 4 days down. At 4 days down, that happened. 4 days down, this happened. 4 days down, this happened. 4 days down, had a little bit better. But, in general, you don't have to be selling it because you don't have a big position, but I wouldn't be getting ready to buy any. Even with that, it's like, you could add some to it on that day, but you can't add much because you only have, let's call it an 8 to 10% position. So maybe you add 2%, but then your stop on those shares has to be there or there. And in fact, what I would do at this point is probably raise my stop on things, up to here, here, and here. So you should be thinking, where are you raising your stop? Ultimately, your 21 day. So stalling. It's just a different character, trying to get a sense for it. Well, so this is good. You have several days in here where it's holding in tight. So now we have something to trade against. If it goes, so this little area, after this wild movement, it went up 66%. Now it's holding in tight. That's good. Not great, but good. And it came down, man. It's tricky. But you would have had to sell those shares that you bought on there, that 2% or so that you added, and it just didn't work out. But it was getting constructive in there. Like, look back at that. Don't do a Monday morning quarterback on me. Look at that. That is constructive. It's holding in tight in here, because this was kind of this was your range that you were looking at it to staying within, and you wanted to stay in the upper half of that trading range, and it was doing that. And then it didn't. That's decent action off the 21 day. If you did want to buy some there, you could use that as your stop, because at least now you have a tight stop. It's only down 0.68, support at the 21 day. You get a gap up. So you had bought a little bit, you get some gap up. I don't know that I would buy that much, frankly, because it's just not acting great. But, add a little bit, but not a whole lot. Yeah. See, chop again. This is the reality. And this is when you're trading high octane names, you really want to think to yourself, like, okay, is this over trading helping or hurting? Over trading over here really helped, and it's probably hurting over here. But then again, what would your better way of doing it be? Well, I can tell you exactly what to do. You could bought a bunch here and sold a bunch here. You had an upside reversal here and you had a downside reversal. I know that there's somebody at home sitting there going, well, that's what you would do. Well, that's what you would do with the context of knowing what had happened when, again, and that's why we go bar by bar in real time, and you try to analyze it given the facts that you have at the time, and then go what would you learn? Now this is starting to get into that habit of, you get an up day and then you get a bunch of down days. One up day, 4 down days. One up day, 3 down days. That's not the type of ratio that you want to have. So I'm, any of the things that I bought over there are probably trying to, well, no, you know what? We've got to close below the 21 day, and it's like this. Now, unless I'm using the bill power from pivot rules, which I'll do some episodes on that, and we'll table that topic, because when a stock breaks out of a base and goes up within more than 20% within 3 weeks, in this case, it went up 66%. You're supposed to hold it for 8 weeks, and this is only 23 days, so it's not 8 weeks yet. So one rule that you could do is say, okay, any of those shares I'm buying as long as I'm still up on them until 8 weeks is up. Another rule you could use is say I'm going to use the quicksand Grateful Dead rules on there, because in fact you could do that on this one, because it has now been trading long enough, and you did have this move out of here, and so all these things have to be there, and you had a decent gain because you had bought shares over here. So now this would have been a sell signal on this day with your quick. Oops, I guess it didn't go through it on this day with your quick. And if you don't know about the quicksand Grateful Dead, please watch the video on that, because take me a couple hours to really get into it. But that would be your quick. But you should definitely, that's like my best invention. So you should watch that. And so now you would have sold some, but it didn't go lower than that, so you didn't have to sell more. And yeah, it is moving up. I really don't know that I would buy a bunch back. I mean, look at that. The volume isn't even above average, and it just looks sloppy. That's interesting. I like it when it settles down. Okay. So as it moved above here and here, I'd be buying some, because now we finally have something to trade with. We've got a mini base. I know it's not long enough to be an official base, but it's a mini type of base. And now you could use your 21 day and the low of this day for those shares. So this one is one where you could buy a fair amount. Now, you also want to be in the look at the context of it's been, how it's been running and everything. But still, that is finally some good action, big spread relative to everything that's been going on in here, closing at the highs, pick up in volume, not massive volume, and then it goes higher. I don't think I'd be chasing it up here. I'd probably be adding a little bit, because I always add when things are going up, but sometimes not in a material enough way to make it worth commenting. Okay, that's okay. I really shouldn't do these bar by bar. This takes too long. I'm sorry, guys. There's no other way to do this one other than bar by bar, so I take that back. Inside day, but closing at the lows, expectation is for it to go lower, goes lower. Now we're getting in that thing of now 3 days down. Let's see if we get 4 days down. It hasn't really triggered any real sell signals come back into this area, so you could legitimately sell some, but not enough to sell everything. Find support at the 21 day in a big way. In fact, now you could be adding back to this one, because you got support at the 21 day, and now it's basically saying, I want to go higher from here. Am I going to go higher? Oh, it looks like I didn't notice that there was a stock split in there. But now it wants to move higher. It looks like it wants to move up to 200. But now we have a clear line in the sand with kind of the low from the day before and this low, which is right underneath the 21 day. So when I have a tight a relatively tight stop that's logical on the chart, I feel more comfortable pressing the gas harder. So even though this has got some signals that it's, certainly sloppier, and the character has never been the same after this. Prior to this, it was one character, different character here, and now this is different. But yeah, I'm going to buy it in a decent amount, more than I would have bought over here, even knowing that went up 66%. And I think this, that's not what I would have expected. Not enough to sell, but not what I would have wanted. That's kind of breaks some expectations. Same old stuff. So you got to exit at that point, close it back below the 21 day. See how hard this is? And that's why I wanted to do something. I'm going to do more of these that are this tricky, because the danger, frankly, is when you look at a bunch of models that work out perfectly, and then you start thinking, oh, this is so easy. They all do exactly this, textbook type of stuff. And the battlefield is different than that. And so you want to look at these examples that are very hard and tricky to see where you would get chopped up. It also will help keep you from playing too hard in the IPOs, because, I've been trading some IPOs pretty hard, aggressively lately, and some of the moves have worked out and some of them I've been getting chopped up in doing more harm to myself, frankly, because I'm pushing it too hard, because I'm remembering this move, not these moves, or this move. So it's a good reminder to myself too to temper how deep in I'm going with things. So an upside reversal, but not an upside reversal in no man's land. It didn't hold the 21 day. It's not back above that base. So you gotta kind of let this one go, or I am going to let it go. And still not enough reason to buy. We don't have anything to trade against. It's up another 3%. Very frustrating. Okay, so how would you buy this one? What would you use? Well, there's a few things you could use. You could use this high over here that it's getting back above. It kind of coincides with the high from the prior day. But really probably not buying any until it gets through here, because it's been just like inching up here over the last few days. And it's not a good buy, frankly. Even if it goes up to 300 from here, it's just really not a great buy. It's a difficult thing, but yeah, would I buy some? Yeah, I would buy some. But just like, I bought some here, and given what I know now, like, let's just go back. Oops. To this day, even knowing that we get shaken out, if I look at this, I go, I'm going to buy that, because you get support at your 21 day. It makes sense in the context of everything. Let's go back to where we were. So this one, the volume is picked up quite a bit on here, up to your 200, up 16%. Feels like it's back in the, the time frame or the style that it was doing before. So you're buying some, but I'm not going to, again, I'm probably going to have that small position like I had over here. I know I went with a big position. Where did I say a big position, in here or over here? But now it's going to be smaller. Just realistically, it's just not a clean breakout. And yeah, it goes higher. But that's bothering me. That's stalling up there. That's serious stalling. I'm glad I don't have a big position. And so now you got to think, where is your line in the sand? Your line in the sand for me is going to be the 21 day at the most. And it's probably going to fail. That just does not look right. Yeah, that's probably, that now looks like it wants to come in. So yeah, probably exiting at least half my position and maybe trying to hold on to the 21 day for some more, but it looks like it wants to do it the next day. Comes down there, gets support there, but still just does not look right. I mean, sometimes it's just hard. So you have to tell yourself, okay, if you're going to trade it, I know I always say, well, if you buy something back and it sets back up perfectly, or sets back up right, you want to buy it back in with more. Like that's a very important concept. But the caveat with that is it's got to set up in the same type of buy. These are just like kind of like little swing trader type of setup buys. They're not position trading buys like, coming out of here or out of here or out of here, or even out of here. These are just ways of buying it. So it got support at the 21 day, which is good. So now I'm going to raise my stop up on those shares up to here. And if I was shaken out of some of them down here, which I know I would have been, as it was making its way back up here, I would have had to buy some of those back. And it's stalling again. Looks good for a day, looks terrible for a day. Looks good for a day, terrible for the same thing. Okay, same old thing. I'm getting stopped back out of that. So, very frustrating. So all during this time frame, stock has gone from 132.50 up to here, and I must most likely lost money during that time frame. So that's the reality, and you want to look back and just go, okay, if that's how I did it without the emotions of the market, I'm just looking at the chart and I'm talking to myself now, just going, okay, what could I do differently? Well, I don't want to change what I would do just because there's one chart that's not working out. But I'm going to put this thing in the back of my mind, just going, okay, with all these little buys that aren't great, what if I just focused in and just said, okay, any buy that's not great, I'm going to put a max amount that I can buy on that day to it, to let's say 0.5%, meaning if your full account is $100, that would be 50 cents, right? That you would be adding. So a 0.5% of your equity for an ad for any of these little add-ons. I'm not talking an initial buy, like an initial buy at a place like here or here or something like that, but any of these other buys of just making them very small when it's not a clear-cut classic entry, because this is sloppy, right? And then you just get chopped up. So, back out of it at this point. And you get some support, but, not great action. What is it going to go back to new highs? This thing is so frustrating, but I'm still not in it. Wow. That's compelling. It's an upside reversal, but it's really not a classic entry. Probably, I'm going to have to wait and pay up for it up here. I'll probably gap up past that, and I'll wish that I bought some on this day, but it's chop and slop. It really is. Glad I didn't buy it. Ooh, finally a tight inside day. That's good. And then a bad day. And an upside reversal. And a bad day. And okay. So here's our first break of the 50-day during this time frame. And I will point out your first real time where you get your Grateful Dead signal right here. I know it went over here, I think it triggered it, but that was too early on to really use. So now you're just saying, I'm staying away from the stock until it goes back up. So in hindsight, you look at this and you just go, okay, when it's that choppy, you want to come up with some rules to still allow you to play, because let's say this thing ran from the 150 area back up to 300, or up into new high ground into the 300 area, post split numbers, that if you sat there and said, oh, I was waiting for a perfect entry, it's going to eat at your soul, right? So you want to play, but you want to be able to allow yourself to play with just a tiny little bit. In fact, I was trading an IPO today that was looking really bad, and that it had some really good gains on that was coming in. And I finally said, yesterday or the day before, I want to have a little bit of this just so I still hold some, but I held less than 0.5%. Like, is that, that thing could have tripled and wouldn't have moved the needle on my account, but I still psychologically had a little bit on there. But it got so ugly today, I just said, I don't even want to have that 0.5% on there. So you want to think in terms like that, like what what rules are you going to put when the stock isn't looking right and acting right, but you really still like the story and the fundamentals and everything, or the group or what have you, that you put some constraints on yourself to say, well, maybe if I've been chopped in it until it's a perfect thing, I'm only going to do 1.25% positions. Like I do that. Like I will do my shotgun. Now Bill wouldn't be happy with that, but there were times where Bill, I always hear these things where people say, well, Bill wouldn't do that. Bill wouldn't do that. Well, you know what? Bill kept all of us at a 1% maximum invested for our entire account for a long period of time at once. So tell me where that's in the book. So there are different things that you have to do for risk management. And he was right to do what he did. I would have, if I was running things, I would have done the same thing because it was a choppy market and we were getting chopped up. And you can see when you're a racehorse how easy it is to get chopped up. So this is a great reminder. And so what are you seeing on this chart that looks so different than over here? Well, that's compressed now, but even when you go back, like let's just go back to like November of 98. Look at how this was trading, these bars, this was trading in a very logical fashion and you can anticipate the move so you could really have an edge. And then you look at, go out over here, or where were we? We were right there at the break of the 50-day. So 525. I believe so, right? That, at this point, you've got your Grateful Dead signal. It's been sloppy for months. It's really been sloppy since over here. Ever since you had 4 days in a row. 4 days in a row. So this wasn't really a down day because it was an inside day and everything, but still, let's just call it down day, a down day. 1, 2, 3, 4, and then it stops. But we had 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Once it happened, the stock was really never the same. So just pay attention to that ratio of up days and down days. In fact, I'll tell a story. I remember, I'll stop sharing for a second. I never really paid attention to that much, just the up days to down day ratio, because Bill had never talked about it, and I just hadn't really picked up on it. And I had traded Tesla, and I made from memory, and made a fair amount, but then I overstayed my welcome, and then it came curling in. And Bill, sat down with me with the trade, and he wasn't happy, and I wasn't happy with it, how it worked out, frankly. And then he said, look at this, that it was going, this is a decade ago, or more than a decade. It was his first move, and he said, look at the ratio is 3 days up, 2 days down, 2 days up, 1 day down, like ratios that are healthy like that. And then all of a sudden it started being 3 days down, 2 days up, 2 days down, 1 day up. Like the ratio changed. And ever since he said that, I've really picked up on that. And I don't think he ever said that publicly, but that was a real nuance. And you can see that with this particular chart. And it's really the character of how it ends up trading. So let's go back to that in here, and maybe I'll do the Tesla in the future. Shoot, let's just do it now. I know it's late, and my better half is making pasta. I can smell it. That smells good. Let me. That's why the weeklies look so bad. Was it up in here? Let me see. So 2013. Oh yeah, must have been up after this. Let's see. Yeah, I think it was in this area. So November of 13. Okay, so let's go to that chart. And I'm thinking this is the time that it was. So kind of look at these blue days. You get like 1, 2, 3, 1, 2, 3, 4 days up, 1 day down, 1, 2, 3, 4 days up, 2 days down, 1 day up, 1 day down, 1 day up, 3 days down, starts changing, 1 day up, 1 day down, 3 days up, 2 days down. Still okay in here, 2 days up, 1 day down. Like you see the ratio in there, and I have an indicator for this that I'll release at some point. And then, a bunch of days up, then 3 days down, only 2 days up, 2 days down, you got 4 days up, but 2 days down, only 1 day up. This is where he was talking to me about it. But there's no way I could have held this underneath the 50-day. That's just not my style. But unless I was making some serious mistakes or something, but which happens, that you just see how it changed. Maybe he was just talking about the character of the stock and not. Let me go back and see if I can remember. It might have been me trading it out of here and him just saying that it's a different character, like kind of the same thing that we were saying about the eBay. I'll put thought into that. I hadn't really thought about that in forever, frankly, in a decade. But that's all these little nuances, and that's why we do these difficult ones. 1999, because that's how you learn, is by doing the hard ones. So again, we had gone through here and we said, okay, once on this day, was it here? Yeah, it must have been. On this day, on 5/25, that now you had your Grateful Dead signal, and that is kind of like all bets are off, can't play anymore until it sets back up and the RS line is back up above both of those and the chart is right. So let's just go out a month and see, it's totally different now. Total different character. We'll go out to the end of the next month. Same thing. End of the next month. Same thing. End of the next month. Same thing. Still choppy. Let me get rid of that. Let's go out to the end of the year. Okay, so you see this has completely changed character, and you can also see the Grateful Dead signal there where that RS line is going through your 50-day of the RS line. This was, really a game changer. Oops, I didn't do that vertical line right, but I think you guys see where I'm going from here. Oops. From here on up, it's one thing on the left side and a different animal on the right side. And let's see how this looks on a weekly. And we'll go out another year, 2000. And it just was never the same. Wow. Let's see. Oh my gosh. I thought that was short. That was 2 hours long. Oh my God. I'm sorry, guys. I'm sorry to my better half too, because she's cooking, and it's 7:42 my time. So I think I'm gonna wrap this up, but we've got to do the fun part now. So for you newbies to the Webby Rambles on, what happens is I start off each one and kind of do a little background and stuff. Then I get into the meat of everything, or the vegetables for us vegetarians of things. And that's what I just got through. And then at the end, I switch gears to musical stuff or other things. And so feel free, if you're not into that, man, no hard feelings. Just don't put don't tell me. Just, you don't have to watch it, but this is my fun part. And this is why I like doing it, because I saw some responses to some questions early, or some comments I put out early on, and people are like, oh, I never knew Tom Petty, or I never knew this. And I was like, wow, I thought everyone knew all this music, but just realized that, just like, I don't know the new music out there, so besides like Marcus King or Wolf Van Halen, or, well, I still call Jackie Green new, but, he's been out since like 2002, but, that's how I look at things. Technically, I still think the Black Crowes are a new band. And they came out in the 90s. So you can see where my head's at, but I just want to like spread the word on some cool bands, and I like talking music. So, put up with me. If not, man, peace out. But we're going to talk music. And kids, what do we have on today? Yeah, cool. We got some ZZ Top going on. Love ZZ, but I have never seen ZZ Top live. How is that possible? That's just wrong. And I never got to see Dusty, who has since passed. But it's really cool that the bass player's tech, so the bass player, Dusty, had passed away not too long ago. And his tech, the guitar tech and bass tech for him, ended up getting that role. And it's kind of funny. I'd watched some videos on him, and there was this gear rundown where all his geeks, watch, and they go through all the guitars or basses and the effects and amplifiers and things like that. And I'd watched him, and he seemed like a super cool guy. And then he ends up being the bass player for ZZ, obviously a three-piece band from a good old little town. So in a big old state. So we are going to share some ZZ, and we will be, where is that? Where did my, there it is. Okay. So we are going to, this is Spotify. It's my favorite place to watch music or podcasts. So this is ZZ Top. And before we get into that, I just got to say, Marcus King has 2 new songs from a new album that he's going to be releasing hopefully soon. And one of them is Honky Tonk Hell. I think it's one of his best tunes yet. It's so, I mean, I got that on like loop. And then recently he just wrote the song about his wife, or released a song about his wife, Carolina Honey. And I am just, man, I'm just on loop on both of those. So I would highly suggest listening to those, or catch him if he's in your town. But that's not what we're talking about today, guys. We are talking about ZZ Top. And we are going to go over my favorite album of theirs. And let's go into the albums. And we're going to show all albums. We'll go down. And this was very early on in 1973. Their first album was in 71. And the Tres Hombres. Yes, I had 3 years of Spanish, and I can't even pronounce that right. But this is a great album. Of course, it's got Waiting for the Bus on it. Love that tune. Jesus Just Left Chicago. Serious blues tune. Oh, beer drinkers and hellraisers can't listen to that anymore because I stopped drinking. Oh, no, I can still listen to the song. And what a cool, fun song. Some other good ones in here, but really the highlight by a country mile is, of course, LaGrange. Oh my God. Their best song. Don't even try to say that there is a better song from ZZ than LaGrange. The rest, and then they've got some live versions in here, and the other songs are good too. But really, it's all about LaGrange. And let me just tell you, let me stop sharing here. LaGrange is so good and means so much to me that we like to go on cruises a lot. So we live in Austin, and the cruises are out of Galveston, so it's south east of us. And along the way, there's a couple ways to go, and one way is longer, and it goes through LaGrange, and I have to drive that way every time. So I drive through LaGrange, and when I drive through it, every time I've got to play LaGrange blasting, and it's just fun for me. One time coming back, I said, you know what? It's a beautiful day out. I know I've got to get back home to do some work, but it was like a week-long cruise. We were coming back. I'm like, let me go through the little town of LaGrange. And it was just beautiful that day. It was a sleepy little town, small town, clearly seen better times. You could see that a lot of people were on hard times there. But it was just a beautiful little town. And of course, the song is about, this was a brothel back in the day. They've since torn that down. And one of these days, I at least need to go to that location to just, take a picture there or something. I like doing things like that. But ZZ Top, great band. They were out on tour. I'm going to try to catch them this time. I know my son did see him a couple of years ago, maybe last year. So very envious that he got to uh, see them. Um, but he's out in California. And anyways, gotta go see them or see see them while they're still with us, because there is it's simple music that just is just down home music, man. Just you really gotta enjoy it. And we'll go over some of the other albums, uh, in future ones. But really, if you don't like this album, you should call 911 like immediately and just talk to the doctor and just say, somebody get me a doctor because I've got some bad musical taste. And then someone else will say, I don't need a doctor. I don't need no doctor. Well, like two of you figured out what I'm doing there. But anyways, that was ZZ. I was brief with that because frankly, I'm very hungry and I'm super excited about these I don't want to give out the guest names here just in case something falls through and they can't do it. But the they're just it's going to be so much fun. I'm just really looking forward to it. Each person I'm going to have on the show, and I'm going to try to just do a bunch of these just hangouts, and they're not going to be interviews. They're just me chatting it up with somebody that I admire. Maybe I admire the type of person they are, what they've done in the market, both, or just something else completely different, maybe something they've gone through in life. And I've got someone that I'm going to have on at some point that really went through some very difficult things in life, and it just is so inspirational. I think he should do a TED talk, and I'm just really excited. I'm going to reach out to him to have him on, and I'm just thinking of all the different people that I could have on and get to talk to and get to share it with you guys. And so we're not going to probably go over charts with those, more just talk. Well, who knows? Maybe we're going to, no rules on it. We're just going to hang out and whatever happens, happens. And that's going to be a lot of fun. So stay tuned for those. Share these with folks, man. I still look at the number of views and I just go and I see other YouTube stuff out there and I'm just like, wow, how did I get so many views and mine is? And it's more of a sense of like the views don't do anything, but for me, it's just more of like a sense of like I'm doing this and I want people to see it. So share it on Twitter. My Twitter handle is M Webster 1971. Of course, the Webby 5150 is the channel on YouTube. But please share this with folks so they get to benefit from this free education and free just random stuff. I hope today's episode was eye-opening to you guys because I really wanted to share one that was really tricky and hard and wasn't like a cookie cutter perfect thing. And go back through it. Don't use hindsight. I know it's really hard for people, but when you're in the battlefield, you don't want to be like, oh, well, that's not what it was like when I was practicing. You want it even harder when you're practicing, make it as hard as possible. Do the three-dimensional chess. Look at the general market at the same time. Because remember, there's going to be news flowing at the time. There's going to be all these distractions. And so you're just trying to learn and get better. And I hope this series, especially the model book series, is really helping you get better. And even if you're not doing any of the things I'm doing, just getting used to going through bar by bar through the charts. Now we will just end the way we always end. First, just another big thank you to all the nice comments. I live for those. Everyone that pops up on my phone, I just put a smile on my face. One of the first things I do in the morning when I wake up, even before I look at my stocks, I go, oh, what comments did I get? Did I get any comments and read them? And it just really warms my heart. So please, I could use them. So please send them my way. And with that in mind, your tuition today, get your wallets out and you send me what I need you to do is do something kind. Our mission here at the Webby Rambles On is to try to change the world in however ways we can change it. And I think being kind and spreading the word of just doing kind things, just little things to people, like I've been on, had a lot of customer service people I had to deal with recently. And, take the time to spend afterwards to do the surveys, to just give them good ratings. That'll help them out. Just a little kind thing takes you 2 minutes. You don't have 2 minutes. I didn't have 2 minutes either, but did it anyways just to help out. Or you see someone struggling in a parking lot or something, try to help them, as long as, you're not going to scare them. I tend to scare people a little bit if I try to help them. So I've got to be a little careful there, because sometimes I look a little homeless. Bill did tell me once, he's like, you dress like a street urchin. I had to, this is before Google. I had to look up what a street urchin was. I didn't know what it was. I thought it was like something I still don't even know exactly, but that's what he said. But it really came about after, I used to, for like a decade before that, or more than a decade, no, about a decade, I'd worn a suit to work every day. And I put in long, crazy hours. And most of the time I'd just be like in my office by myself, not seeing a soul, wearing a tie and a full suit and everything. It's just silly. Like, if you're putting in crazy hours, just be comfortable. So that's what I did. he didn't he didn't dig that, but that's okay. Then I changed and dressed nicer. But now it's nice being at home and being comfortable. But with that said, stay safe out there. We got the 4th of July coming up. Please, if you've got animals, especially dogs, so many dogs are so scared of the sound from the fireworks and things that you can't even hear, that they can hear, that they run away and they get lost, put down in shelters. They get hit by cars. So please, just, I know everyone likes, when we had our dogs around, we just stayed in. We just stayed in with them. We didn't do any of the 4th of July celebration stuff, because we put the dogs first. Georgia and Violet and Kona, when Kona was with us, and they're all gone now. So maybe I'll go out and watch some fireworks. That would be fun. But enjoy yourself. Be safe. Remember why we have the 4th of July. All these little holidays that we have, they're there for a reason. So always go back and kind of look and understand why, and then call up the NYSC and ask them, why in the world do you guys not give Veterans Day off? You freaking, I'll stop myself there so I don't get myself in trouble, but you know what I'm trying to say, man. It is ridiculous. It's greed. They don't want to shut it down, because then that means less fees and everything else like that. I'm on a mission in life to help people be kind and spread the word, as well as recognition of our veterans like my father. And the minimum that the New York Stock Exchange can do is shut down on Veterans Day. So spread the word for that too. And until next time, peace out and see you guys later.